Hi there, I'm Dean Heskin. Thanks for tuning into our podcast, The Secret War on Cash. I have with me my co-host, Chris Agelastos. Today we're going to be looking at what's been happening or what is going to be happening with the price of gold. There has been already a lot of activity. We've talked about this many times as the gold market has progressively been getting stronger and stronger. This has been happening to a great extent as a direct result of things in the economy, both current as well as perceived future reality, getting worse, or at least was expected to get worse. As this is the case, Chris, the first article that we're looking at here today, it's entitled "As Political Parties Fall, Gold and Silver Will Rise." Now, we are going into an election season. The political parties are talking about is not just isolated to here in the United States, it's talking about around the world.
Yeah.
But tell us more about this article and this title. As political parties fall, gold and silver will rise. What is the relationship or what is the correlation there? Why does that happen?
Yeah, well, they actually even go back to ancient civilizations, right? Talking about the fall of Rome and kind of comparing some similarities. And it's one of those things that, oftentimes governments mismanage their funds, right? They tax more, they print and spend more money, create more money than they really should, don't manage it well. It causes problems in the economy. So people become unhappy. Unhappy people try to vote in change, bring in other political candidates, maybe other parties. And ultimately, there is a crash at some point of the financial system that has been abused for so long, and we kind of have to start over. And so that's some of what they're talking about in here. And, they do mention, like you said, the elections, not just here in the U.S., but also the U.K. and France, that no matter who is voted in to office, you have such tight margins that approximately, half the country is going to be unhappy, no matter who gets into office. And,
Right.
That's just part of this sort of powder keg, I guess, is the best way I could describe it, of what's going on in the world. And all of those negative factors, when you add to it some of the political, not just the political, I'm sorry, but the wars that we have going on, it just sort of compounds. And all of those things are good for gold prices and can cause prices to quite literally skyrocket.
Sure. And we've been seeing that. And I think, as a point, important point of designation as in this article,
Mm-hmm.
the title, "As Political Parties Fall." We'll understand it. We've had people ask us about this and talk about this in the past. When they're saying fall, it's not saying, for instance, like the Republican Party here in the United States would fall or become obsolete, or the Democratic Party, or our political system as a whole would fall or fail. What they're talking about is when they say the fall or collapse, as it gets into in the article here, is the system as we know it, the system as it's been for years and years. And with that said, I think there is enough information out there, and certainly a compelling argument to be made that it's already happened, and our political system as we know it has fallen, and it continues to fall. And the question will be, number one, how bad will it fall? How bad will it get? And what is going to ultimately come out of this? Now, as we talk about gold and silver prices rising, I'm going to have Chris CC, our producer, pull up the next article. When I saw the title of this, Chris, my only response would be, come on, how is this even possible? So this came out of Bitcoin.com news. And it's talking about how gold could surge to $40,000 per ounce. This is what a strategist is saying.
Yeah.
We started off this year with gold prices knocking on the door of $2,000 an ounce. We have reached points up to nearly 2,400 an ounce, where we had a plethora of analysts out there talking about how by year's end we should be looking at strong $3,000, maybe $3,000 plus an ounce. We've even had a few extreme scenarios where some of these strategists or others have said gold prices could reach 12 to 16,000 an ounce, which sounds expensive in and of itself, certainly. But when you adjust it for inflation, in today's dollars, et cetera, becomes a little bit more viable, excuse me.
Yeah.
But $40,000 an ounce gold, is this even a possibility? And what on earth is causing this strategist to even say such a thing?
Yeah, well, he's simply pointing out that the U.S. Since the late 70s and early 80s has gotten away from backing our currency with as much gold as we used to, and he's saying if we went back at a minimum, to what our the level that our treasuries, U.S. treasuries, should be backed by physical gold, gold would need to be at least $16,000 an ounce, and upwards to $40,000 per ounce if we were to back it like we did at our peak in around 79 and 80. So in a sense, we've already been there before. We already had that kind of backing in the past. And now, of course, with inflation, the dollar being worth so much less, we would see these higher prices in gold, really not because the gold is more valuable, but because our dollars are worth so little. And they point out a couple of things in here too. That I know because I work in the industry, but even when you hear it, it's impressive. Over the last 25 years, since the year 2000, gold has outperformed the S&P 500, per annum, at about 9% a year, which is a good number. But you have all these shows on CNBC and Fox Business every day talking about all these other investments. But you don't hear them talk about gold all that often, right? And yet we've outperformed it. So I think even though that figure today, 16,000, 40,000, sounds high, $600 an ounce sounded really high in 2000, and in 2006, $1,000 an ounce sounded really high, crazy. I mean, I know we were even looking back at some of our recent some of our former marketing materials, and we were telling people, look, gold's going to go from 600 an ounce to 1,000 an ounce, and they thought we were nuts. And then we started saying 2,000 an ounce, and what do people say? Well, you're crazy. It's not going to go that high. And we've hit all of these milestones. So I think when you really put everything into perspective, while 16 or 1,000 or 20,000 or 40,000 an ounce gold sounds high today, when we hit those numbers at some point in the future, I think people are going to look back much like we do now and say, I wish I could have bought more back then.
Well, and the beauty is they don't have to wish to. They can do it right now.
Yeah.
And what is also interesting to note here, in this article, it talks about the price of gold moving in relation to our treasury debt, et cetera.
Yeah.
But also, not to be forgotten is the fact that there is excessive gold buying that is taking place as we sit here, as we speak, by BRICS nations, by central banks, individual investors, institutions. So it's not just in relation to the debt, which there's a correlation there. There's somewhat of a relationship, but not directly. This is just looking at the math that is saying, based on previous debt, this is where the price should be.
Right.
I would say that as we've covered in other podcasts, there is a stronger, broader gold buying contingency out there, probably like we've never seen before. And so when you take those two factors in, maybe this $40,000 number isn't so unbelievable. I mean, you look at shares of stock like in a Berkshire Hathaway, we've been hearing numbers like this, which people thought this is absurd that shares of stocks would sell for this type of money. Yeah. But when you put it in the grand scheme of things in terms of return and consistency and things of that nature, to your earlier point about how gold has performed, maybe it's not as inconceivable as what we think it is. So definitely something to watch. And I think we will have a lot of very happy customers if we do see gold prices get to that 40,000 mark. And if you're not a happy customer and you'd like to find out more about either how to become one or what's involved with becoming one, please feel free and contact our office. You can do so by calling at 1-800-289-2646, or you can visit us online. Do that at www.swissamerica.com. You can have your questions answered. We have an abundance of free materials that we can forward off to you to get yourself educated and take advantage of what many of these strategists are saying is going to be a meteoric rise in the price of gold. Chris, thanks for the info. For you, those of you tuning in, thank you for doing so. And if you haven't subscribed, please do so, as we'll look forward to bringing more news and information like this to you in the future. Have a great rest of your day.
Take care.